Robinhood stock is up over 290% year to date in 2025. It's one of the best performing stocks in the market this year. Investors are asking me if they should buy Robinhood stock before the company makes an investor update on November 5th, 2025. That could influence the share price even more than it's already moved so far this year. So I'll review the company's progress and update and let you know what I think about it heading into these earnings results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in its recently completed quarter, Robinhood reported key financial metrics that are moving in the right direction. Total funded customers increased by 2.3 million year over year, and it now boasts 26.5 million funded customers. These are customers that have put money in their account. The total assets on the platform have ballooned to over $279 billion, which is up 99% year over year. This means the total money that's on the Robinhood platform is 100% higher than where it was last year. And if of course, this is important for Robinhood because this is partly how the company makes money. The more money in transactions on the platform, the more money Robinhood generates from trades as it directs the trades to other markets, and it earns a fee for directing those transactions. And of course, there are fees associated with trading certain assets the company generates. It might tell you that it's free when you're making a trade, but it makes money for directing the trade in something called deal for order flow. And so the more money on the platform, the better it is for Robinhood. Overall, total net revenues increased by 59% year over year to $3.6 billion, with earnings per share soaring by $1.64 to $1.97. The company's gold subscribers, which are fee-paying monthly subscribers, increased by 76% to 3.5 million. And that's just an indication of how much value these subscribers find on the platform. Of course, cryptocurrency is one of the most popular things on the Robinhood platform. It's one of the lowest cost places to trade crypto, and people who have crypto generally like to make these trades. They like to go in and out. It's a speculative asset. You can only make money on cryptocurrency if you sell it to somebody else at a higher price, right? If you just hold cryptocurrency forever, you will never gain the benefit of the cryptocurrency. It's not like a business where you can own a business and you never have to sell the business and you can still profit because the business generates profits from its everyday transactions and it sends you dividends as the business makes money from those profits. Cryptocurrency is not like that. You can only make money if you buy a cryptocurrency at a certain price and you sell it to somebody else at a higher price. Okay, so it needs transactions in order to make money. And you might say, well, no, it doesn't, because you can use cryptocurrencies to buy things from businesses because businesses are increasingly adopting cryptocurrency and allowing you to pay for cryptocurrency. And that's kind of the same thing that I just said. You can only make money from cryptocurrency if you sell it to somebody else at a higher price. In this case, if businesses are accepting cryptocurrencies as payments, then that's somebody that's willing to accept crypto at a higher price than what you paid for it, right? It's just a business instead of an individual, but it's still somebody that's accepting the cryptocurrency at a higher price than what you paid for it. So you need to transact with it in order to make money on it. And so far, it's been great for early adopters. They've made great gains. Cryptocurrency prices are soaring, and the current regulatory environment is favorable for cryptocurrencies, and that's working really well. But the one thing that's really exciting for Robinhood stock investors is the company's foray into the prediction markets or event prediction markets. And that's something that I've been paying close attention to. I follow DraftKings, and I've downgraded DraftKings stock because of the rise of prediction markets and the real deregulatory environment that's allowing these prediction markets to increase. Regulators are kind of taking a hands-off approach and letting these companies enter the industry and take market share away from companies like DraftKings, which have gone through the rigorous process of gaining approval in each of these states to offer sports wagering. Now they run the risk of losing the market share to companies like Robinhood, Polymarket, Kalshi, Coinbase, and others that are entering in through the back door. Now, before investors get too excited about something like that, I always caution investors not to make their investment case based on government action, because government action changes based on what's popular. So right now, the deregulatory framework is what's popular under the current administration. The next administration that comes in can reverse all of those gains and say, no, we can't allow these companies to operate like this. Sports gambling or event-based wagering needs to be more regulated and needs to be taken on a state-by-state approach, just like sports gambling is right now. Sportsbook is going at it on a state-by-state approach, and that could reverse all of these gains that these companies are experiencing right now because of the deregulatory environment that's working in their favor. And if you want a cautionary tale about this, just look no further than the electric vehicle industry. So in 2020, this was among the most popular stocks to buy, anything related to electric vehicles. These stocks were soaring, and it was because the then Biden administration was very much in favor of developing these new type of industries, these renewables, these electric vehicles, etc. And back then, I cautioned electric vehicle investors and I said, don't get too excited. The current administration favors this right now. The next administration that comes in may not favor these types of renewables or electric vehicles. And what happened, right? President Trump comes in and is reversing all of those tax credits and incentives that were put in place under the Biden administration, encouraging the adoption of electric vehicles, right? So just as quickly as the government will put an industry in favor, they will put an industry out of favor. So don't base your investment thesis based on what the current administration is doing, because the next administration or the one after that can reverse those gains. And that goes for cryptocurrencies and that goes for prediction markets also. So be aware of that. Look at your investments on a longer term basis, not just on what's popular right now, because governments just go for what's popular, and what's popular right now might not be popular 1 year from now or 3 years from now. Base your investment on fundamentals, on the customer value proposition and unit economics. So all that being said, let me share with you my valuation of Robinhood stock. I updated my intrinsic value per share calculation today, and I increased the free cash flow expectations over the next several years by a meaningful amount, which increased the intrinsic value per share. Prior to the update today, I valued Robinhood business at around $35 a share. I upgraded that value to $48 per share. But still, compared to the current market price of $145, the stock looks meaningfully overvalued, and I'm not surprised. It's been one of the most popular stocks, and when stocks become popular, overvaluation tends to follow. Look no further than Tesla, Palantir, etc. These are several of the most expensive, most overvalued stocks in the market, and Robinhood is approaching that territory. I would have put Robinhood in the category of Tesla. I would put Robinhood in the category of Palantir, meaning that it's a business that's experiencing excellent growth and is in a great position and capitalizing on trends that are improving the fundamentals of the business. Revenue is growing, customer counts are increasing, profits are expanding. That's more similar to Palantir and less similar to Tesla, where it's going in the opposite direction, but the stock price is increasing. So all that being said, do I think Robinhood stock is a buy ahead of its investor update? I would say no. The share price is already soaring. I see a bigger downside than I do any upside in the upcoming earnings release. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.